had about 30 minutes. We walked around the floor, and we got a chance to see some of the things that are out there. But before we get into that, maybe we should just do a little quick intros about some of the things that you're presently investing in, so everyone kind of gets an idea, your role in this capital discussion. So you want to kick it off?
Brad Feld. I'm one of 4 partners in a firm called Foundry Group. We're based in Boulder, Colorado, but we invest all over the US. I think for the CES crowd, the thing that's probably most relevant for us is a theme we call human-computer interaction. So we believe that in 20 years, the way we interact with computers is going to be radically different than how we interact with them today. I actually believe the machines have already taken over, and they're just waiting very patiently for us because they've got no incentive to kill us off. We also have a bunch of investments in companies that we describe as software wrapped in plastic. So companies like Fitbit, that makes health trackers, or modular robotics, which is right around the corner. These are companies that have hardware products, but the real essential part of those products is software.
So Christine Herron from Intel Capital, and I'm on the consumer internet team there. So things I would invest in tend to be, whether it's social commerce platforms, some infrastructure platforms, as well as pretty much anything that's consumer facing. Our team's also been looking at personal devices, so things like the Fitbit would be a good example of that as well. And tend to be very interested in context-aware computing, and that's something Intel in general is aware of. It's also a really exciting growth area for technology companies. And I think given that we're stage agnostic, sort of across the 12 teams at Intel, my team does tend to be the earlier stage, so I get to cause the most trouble, which is fun.
Hi, Rory O'Driscoll, Scale Venture Partners, kind of in terms of where we invest, both kind of where we invest and then what I'm investing in. In terms of where, we invest in revenue technology companies that are looking to scale. So a little bit probably around after where Brad would probably come in. So when I think of the things we think about when I look at these companies here, it's about the business. You got a great idea, you got a great product, you got first customers. How do you scale it, which is especially challenging on the kind of consumer hardware side, given all the dynamics I'm sure we'll talk about. That's kind of where I invest in terms of stage. In terms of what kind of companies I'm investing, my personal passion is on the business productivity side, on the kind of personal productivity and business productivity. I'm a board member at Box Technologies. I'm a board member at DocuSign. I love stuff that makes your kind of working life easier, or your organizational life easier. So that's kind of most of what I do. I have kind of one unconsummated passion. I long still to do a music deal that actually works, and I still hope to do that before I die.
Excellent. Okay, so we spent the first half hour kind of looking at the floor and checking out some of the products. And you kind of probably found some of the products that you're most interested in, right? So there were robots, right? They're not out there killing us yet, but there were robots out there. There were other products that probably each of you would take a look at. Can you maybe tell us a little bit about, without showing bias to some of the companies you may have invested in, some of the companies that you found the most interesting?
Yeah, so from my perspective, things that are one stage away from an activity we're already doing that meaningfully enhances our interaction with the universe is really interesting. So on the far end, there's a company that makes essentially a swim tracker. So if you think about health and fitness tracking, we've got a bunch of stuff for runners and for cyclists. The things for swimmers, there's a couple of products. I swim some, so I have one of them, and they kind of just suck.
Yeah, water's always the issue, I feel like.
Water's the issue. The way you deal with it while you're swimming is the issue. And what they have is a thing that fits on your goggles and lets you run. Another fun one, again, extending our human interaction one note, is there was a company right over there, I can't remember the name of it, that makes a thing that you put on your face that has LED lights on it. And science behind it that helps you recalibrate your sleep cycle.
Right, I saw that.
Right, so again, augmenting ourselves as humans in a way where the machines help us incrementally is pretty cool.
Definitely, definitely. Christine?
Yeah, I think most of what sort of attracted my attention walking around were, there's doing internet investments now, internet investments are interesting because you can iterate so quickly and test and get immediate feedback, but there's just nothing like making something tangible that you can actually drop on your foot. There's, where you I really made something. And so there's a lot of really interesting products that would fit that category out here. A couple that caught my eye. Let's see if I can get these right. The Cubelets, the little baby robots that have something already designed inside, and each one has a different function. I just thought that was very interesting. It's like the next very expensive version of Tinker Toys, the cool Tinker Toys with the engine attached. So the car would drive. And those guys are pretty interesting. I especially like the ideas like it's cheaper and more able to be opened up so people could sort of hack in and give different instructions to the different types of cubes. I was also pretty interested in, what was the name of the company? These folks, Securify. Yep. Securify had this product, which was basically a router with a touchscreen interface that could connect to sensors, and there's just immediately lots of interesting uses for that in my mind, because I want to know someone left the back door open so I can yell at them to go close it, as versus fine to the next morning and the dog's been outside all night. Or silly things like that. I think there are a lot of very simple uses, very close to how I spend my time now. So I think those are two of the ones that caught my eye.
Excellent. Rory?
Yeah. I had one interest that was in common with the other two folks here, but now I'm not so sure. Because I really liked Cublets over there. Yeah. And they make little robotics toys for children and people who are still children at heart, which I include myself and my son, one in each category. But then Brad, who is an investor, told me that the robots are going to take over and kill us at some time. So
I did not say they were going to kill us. In fact, I believe that the robots will not kill us.
They're too small. Those are too small.
They have no motivation. Good. They have no reason. They're going to treat us the way
and time is of no issue to the robots, so they can wait.
They can just be patient. So they're not. Robots are not bad. Humans kill humans. Robots not so much.
Asimov still lives. Yeah, I was a little worried about telling my wife I brought home a toy where one of the board members said it might hurt you a little. But now I'm in. I really like that company. I really like the product, and I really like kind of the story and the potential to be a Lego for the 21st century. Other things I liked, I also saw and liked the product you were referring to, Brad, was the Instabeat, the swimmer. Yeah. Because I have a Fitbit, as you goaded me to a year ago, and it's just a bummer that you can't get points for your swim, because that's all I got, and I need to get more calories allowance, and I have to type it in every time. More generally, stepping back, kind of the things I saw, what are the kind of macro trends here on technology? The first is, really noticeably is kind of the impact of Kickstarter, Indiegogo, the ability of people to get a prototype out the door and get that first 10,000 products or 5,000 products. It's really profound. There's a number of folks here who just wouldn't be here without that.
And it's really well suited to these, hardware, again, things you can drop on your foot. People will give you money for, even though a venture capitalist might not.
So let's talk about that for a second. That's a good segue for crowdfunding. So some of the platforms out there that allow you to do that. There were a couple companies I saw. Zboard is one of them. They're making electric skateboards. I don't know if you got a chance to see them. They raised $250K from Kickstarter, shipped 350 product for that first initial investment. What are your feelings on Kickstarter products?
I think Kickstarter's awesome. I probably spend a couple $1,000 a month sponsoring Kickstarter projects. So that's one mechanism, but I would, to riff on Cublets, which we're investors in, one of the things that is a huge shift is that the cost of actually prototyping these products is so much lower. Right. In addition, the manufacturing of the initial runs is also very low relative to where it's at. So you don't have to crank up this huge manufacturing process, and in fact, Eric, who's the CEO of Modular Robotics, manufactures all of the product in Boulder. Right. So it's not that he has a line in China. Now, you can imagine that there's some scale dynamics that you're looking for, but you have the ability early on as you're prototyping it. And an example of that is I'm an investor in a company called MakerBot, which is one of the leaders in 3D printing, desktop 3D printing. Yep. They manufacture 100% of their product in Brooklyn. Wow. So one of the big shifts that's happening in this next wave of the creation of these hardware, software integrated products, because A, so much of it is software, and B, the hardware dynamics and the prototyping dynamics are so much less expensive. If you can get the hardware and software close to each other, so that you're really iterating on that design very aggressively on that first product, you actually can come up with an amazing first product.
Yeah, but what do you do when there's price compression, though? Like, if you get price compression, then you're not able to sort of, because one would argue that the value being delivered by the software is sort of making up for the cost of the hardware being manufactured in Brooklyn.
Maybe not. In the case of MakerBot, right, we actually have a price advantage over comparable products. So it depends where you are on the price curve.
I also think, chiming in on this, because I think, if you accept both of what we said, that Kickstarter gets you a start, manufacturing in the US allows you to do it at least cost effectively. We could argue about manufacturing at scale, but we can definitely agree that manufacturing a prototype on early stage can be more cost effectively done in the US. So I think the interesting challenge is the next step beyond that, which is sales and marketing distribution. It's where kind of we invest. And it's great, you got a product, you got the first 5,000 customers. Kickstarter's a great start, but you're not going to get 5 million customers on Kickstarter. And the challenges, I think, in building these companies really come as you try and get out and get broader distribution and making darn sure that what you don't do is give away the store in reaching for volume distribution and retail distribution too early. Again, one of the reasons I keep on picking on Kublets, one of the reasons I like them is because a very thoughtful strategy on distribution, right? And able to buy it on the website. Some other folks I talk to, then just being all virtual and selling on Amazon. What you can't afford to do as a startup is spend $10 million, put it in 5,000 stores on October 1st, and then get a phone call on Christmas and see if you're bankrupt or not. That's no way to live your life. So I think that's where it's still a capital challenge.
I think that's a really interesting shift, because I think a lot of people, if you go back a decade, if you had consumer products, the only way that you got mass distribution was through retail. There's a mental model, especially among a lot of software investors, that retail distribution doesn't matter anymore. That turns out to be bullshit. Because there's still an enormous amount of retail distribution. It's the middle part, before you've gotten your product to the point where it will sell in real retail distribution. That's very powerful, because you can iterate very quickly on that. When you get to that scale where you're selling 1 million units a year or more than 1 million units a year, all of a sudden Target, Best Buy, AT&T, all those storefronts become interesting.
It's a beautiful thing to fulfill, but you're right, it's that middle stage of it's not just figuring out the product, but also creating the buzz for the brand that allows you to lean into scale.
Oh, and if you go back, and then I'll let you go, Christine. If you cycle back to this notion.
You're so kind.
All right, we're respectful. If you shift back to this hardware-software mix, and I think this really comes down to it, most of these hardware products are dramatically enhanced by software. The software takes, in some cases, a lot of time to get the fit of the hardware to the consumer. So your first version, Fitbit's a good example, the first version of the Fitbit website and the Fitbit integration software was groundbreaking, but it was mediocre. And everything else was awful, so they were competing against awful, but they had mediocre. Today, what they have is amazing, but it took 3 years. So you keep building on it as the product cycle evolves. And that's something that's unique, I think, versus this big bang distribution where you got to get it all in a box and get them out there.
Yeah, and this is maybe less of a CES category, but there's a phrase called consumer-driven supply chain, which meant something a few years ago very different. But what I see happening now is where you see in fashion, like something like ModCloth or someone like Whittleby, where you've got so much feedback and engagement with the ultimate end buyer of the product that you're altering your manufacturing in real time, because the manufacturing processes have become so quick and so iterative.
And actually Zboard did that to be able to fulfill all those orders. They didn't expect that, so they had to tweak their product.
You're in the middle of fulfilling and you're like, wait, we're making this better as we go. And so,
Well, there's a number, going back to Kickstarter, there's a number of Kickstarter projects that were very successful where that's been well understood. Twine was probably the first, for those of you that follow Kickstarter and the history of it, where it was dramatically more successful as a campaign than they expected. And as part of that, they then built a large audience of people who are interested in what they were doing. And as they built out the iterations and sort of figured out now how to actually physically manufacture this thing they created, they iterated through the design of it. And you're seeing that more often.
I mean, to me, that's one of the 3 most disruptive trends right now, is consumers being actively engaged in what's being manufactured and being shipped in the same short time frame.
Real-time product development, basically.
I think one of the other things, kind of taken to making a different point that's just noticeable, even though it's so obvious, is how much the iPhone is the center of what people are thinking about here versus, to state the obvious, any prior computer manufacturer. Just not as relevant here. You walk around here, so many people are either building on the iPhone as a platform or adding a dongle to the iPhone. If it's a software, it's an iOS app. And so much of what's being done on the human-computer interface even is about, I assume I have an iPhone, now what do I do with it? It's just tellingly terrifying if you're not that manufacturer in terms of being relevant here. I think another thing that's interesting on the same area is when you are building a hardware attachment to an iPhone, is that on standalone basis a compelling business? If you look at Square, if they'd said what we're going to do is sell dongles, I don't think they'd be valued at $2 billion plus. I think what we're going to do is use the iPhone, use the dongle, and build a business that has digital components and kind of a mixed model and very profitable.
They're disrupting payment processing, not the iPhone.
Totally.
Well, it's very telling. Square as an example, back to the hardware-software dichotomy. Square is a software company. Right, the hardware is simply enabling. They'd be Square would be perfectly happy if they didn't have to ship out little plastic things, but that was the enabling dynamic for what is their software infrastructure.
Which is what, and not only perfectly happen, it might happen in Square case, but there are some of these hardware products where 6, 12, 2 years from now, there mightn't be a standalone market, and you really do have to think about a business beyond a simple hardware device.
And I think one of the areas that we find interesting from an infrastructure point of view are the companies that say, I don't care if you have an Android, I don't care if you have an iPhone, we just know that you're going to have sensor data of some sort, or maybe it's from your Fitbit. You're going to have sensor data, you're going to have radios attached. What do you do with that information? Like what magic actions can you do, whether it's in your home or in your car or whatever that might be?
So one question, how many people in this audience do not have a smartphone?
3.
Okay, 3. That's about right. Usually 1 or 2 or 3 people in a group like this. Every other one of you is instrumented. So this notion that we're going to be instrumented in the future, you're already instrumented. And the issue is the instrument just happens to be the size of a phone, right, versus a size of this, which is the Fitbit, versus a thing that's injected in our skin like a Manchurian candidate, right, or genetically bonded to us. So we're already there, we're already conditioned that way in terms of the data, and now the question is what happens? And that's what's part, I think, so exciting about this is these are version 0.1 products of where we're going over the next 20 years.
That's a good point. All right, so let's steer back to capital a little bit, because that is where we're...
Cap versus crazy. There was
we got to crazy for a second.
From the Manchurian candidate to the money. It's all American politics.
So we kind of touched on it lightly, but getting from that initial Kickstarter to that, Best Buy or whatever, how do you get there capital-wise? What's your advice for any of these companies that are trying to get there? I mean, we've got a pretty solid startup audience. Is it capital? Is it throwing money at the problem? Is it?
Money always helps.
Money always helps, but this is a category where you shouldn't throw, as much money at the problem as you should in some other cases where you're building annuity revenues. To me, there's something, these are going to take capital no matter what. You're building consumer brands, you're building hardware products. But to me, there's something honest about trying to have a product that can command roughly the value it takes to make it plus some kind of reasonable profit at maybe not at small volume, but at medium volume. So I don't think you can just throw money at it, especially in that period that Brad outlined earlier, where you're trying to find out the fit. I think what you have to do is build a product and ride the cost curve down and the price down as you expand the value. But if you can't identify customers who are willing to pay a reasonably hefty sum of money relative to your costs, maybe that's telling you something about the business you have there. I don't know if folks disagree, but go for it.
I think you want to get to products where the market is pulling you versus you're trying to push into it. With software, the physical goods is 0. So you have a lot of money that you can spend trying to get other things to happen. With the hardware, your cost is somewhere between, at the best case, 25 or 30% of the product, and typically 50 to 75% of the product, depending where you are on that curve. So your capital is going into the product. So in some ways, going slower on the front end, allowing customers to buy the product, developing that relationship with them, and taking some more time as you let the software that you're building mature better and that fit together. And then when that fit happens, then accelerating makes a big deal. You've seen some companies in the last few years that took, from a venture perspective, almost the opposite approach. They raised $100 million. They created products that maybe worked, maybe didn't. They spent a bunch of money on sales and distribution and marketing campaign, product out the door, and it flopped. And there's been cases of product flop because of quality problems or market fit or software being bad. But then you've already done that versus this sort of start and build. And instead of feeling this urgency of, oh my God, I got to get my product out the next 6 months because somebody's going to beat me to the market, take a 3 or 4 year view on that first R&D effort. And if you happen to be in year 2 or year 3 and all of a sudden the product starts to accelerate, then lean in with a lot of capital.
And I think, I'm not going to assume that most companies in here aren't the ones who just sort of snap their fingers and get $100 million. So assuming you're not those guys, typically the advice I give folks is, number one, raise the money that you know how to spend. So if you have no clue how you'd spend $10 million, don't raise $10 million. It's not an effective thing for you to be doing. So that's number one. And then number two is be realistic about what's the story you need to be able to tell when you go out to raise money again? And most people do raise it more than once, so assume you will. What's a story you need to be able to tell to show progress from today? What assumptions did you prove or disprove? What models? What was the hypothesis? How long did it take to collect that evidence against the hypothesis and iterate from that? So figure out what that amount of time is. Tack on 6 months for buffer and a couple of outrageous mistakes that you'll make that you don't know about. And then you'll have some sense of, okay, I know how to spend that money, and that's the story I'm getting to, that's the hypothesis I'm proving or disproving. And then realistically, it all comes down from that, because if it's $500,000, your strategy for fundraising is very different from it takes $3 million to get to that next stage. Right. You might want to talk to Brad, you might want to talk to Intel, you might want to talk to Scale, and they're going to be at very different places for you. So
I think this is the awesome thing about the dynamic we're in. It's true also in software that you can, with much less money, get something out and iterate aggressively on it. Right. But if I go down the list of the companies that we've invested in that had a hardware component to them, right. Fitbit launched a commercial product on $1 million. Right. MakerBot launched a commercial product on $1 million. Yep. Modular Robotics launched a commercial product on less than $1 million and nothing raised, just government grants. Right. Orbotics, which makes Sphero, launched a commercial product on a little bit over $1 million. Yep. So the idea that you can, I don't mean the prototype, I don't mean here, let me show you what it is, but actually in market with right. a product that people were buying before they had to raise that next round of capital. And that's powerful, because it used to be the case that if you wanted to build a product like this, you had this person, I heard so many people say, I need $5 million, I need $10 million because I need to build out all this. And the linkage is that equity, investor equity, is one of the sources of that $1 million. Another would be going on Kickstarter and right. selling your product to 1,000 people or 5,000 people. Yep.
Yeah, I broadly agree with everything said in terms, it kind of gets back to the take your time. If you can get the product out the door for $1 million, $2 million, $3 million, and if you take a strategy of building your company organically and listening to the market and not trying to get ahead of it, you can end up with a lot more control. Look at the GoPro entrepreneur is stunning. They have a company that was recently valued at $2 billion, and I believe he owns more than half of it. That's an incredible achievement. And 7, 8 years ago, if someone said, we're going to make this camera, we're going to strap it to helmets, and it's going to be worth $2 billion, I'm not sure I would have said yes, right? I think one of the things and I think the logic of going organically makes sense. I tend to sometimes approach things from a financial perspective. If you think of software, you get this recurring revenue stream. The reality is on hardware, when you're selling a hardware product, you've got to stand on your own 2 feet, because you get the money, you give the product, and yes, there's some revenue after that, but if you really are subsidizing the upfront, you actually don't have a business. Which gets me to a point about the dynamics of the market today. Around the tablet market in particular, there's a weird dynamic. Because unlike many of these other hardware products, in the tablet marketplace, there are people bringing products to market where the rationale is not the hardware has to stand on its own feet. In the case of Amazon, if we could just break even on the hardware, they'd be super happy, because they have this ongoing business model of selling additional products, additional goods that will allow them to kind of bundle it together. Right. So I think being wary of spaces where you're up against a competitor who is utterly willing to fund the hardware at or below cost with a view to making it on the back end, especially if you don't have that kind of model. If they can sell hardware, and you can sell hardware, but they can sell books, movies, et cetera, and on a bundled basis make more money, you're probably not going to be able to compete with your tablet versus their tablet. It's obvious when you say it, but there are spaces where it's just incredibly hard right now.
Yeah, that's great.
Yeah, and I think that's a challenge, I think, for some of the hardware and electronics companies is, what's that ancillary business, right? What's that piece, and so, so for example, is there a business, the Z-Board guys, do you guys have like a travel business that goes with that has routes, and you can compete, and who does what faster and who has what better tricks? There are things you could probably do, or certainly like with the robots, the little robot cubes over here, are there different packages you could buy that would teach those cubes to do different things, right? That's like a whole different business. Again, I think it's challenging because it's not obvious right. for some of these guys. It's one of the reasons I liked the router guys, right. SecurePi as well.